All right, let's get right into it. There's a massive shift happening under the surface of the financial world. And honestly, it could change everything for your retirement. We're talking about new rules that are throwing the doors wide open for crypto in a way we've just never seen before. And here is the big headline, the thing you need to know. In both the UK and the US, regulators are giving the green light for crypto products inside mainstream retirement accounts. Yeah, you heard that right. This isn't some backdoor trick anymore. This is crypto walking right through the front door of the entire financial system. And to really hammer home just how big of a deal this is, one of our sources, Zen Signals, puts it perfectly. This might sound a little technical, a little in the weeds, but what we're watching happen is genuinely historic. A whole new asset class is being woven into the very fabric that holds our stocks and our bonds.
So how exactly did we get to this point? Let's take a closer look at the actual regulatory changes happening on both sides of the Atlantic that are making all of this possible.
You know, what's really fascinating here is that this is happening in parallel. Over in the UK, investors can now buy regulated crypto products directly within their tax-friendly ISAs and pensions. And at the exact same time, in the US, the Department of Labor just removed a huge roadblock, basically telling employers they can start looking at digital assets for 401ks. This isn't a coincidence, it's a coordinated global shift.
And this isn't happening in a vacuum. Just look at all the other signs. You've got the London Stock Exchange getting ready to list crypto products. The SEC in the US is making it easier to approve crypto ETFs after the big Bitcoin and Ethereum launches. And in a really interesting move for certain ecosystems, a judge just threw out the SEC's lawsuit against Richard Hart. That's a huge cloud of uncertainty lifted. All of these are like foundational bricks being laid for the future.
Okay, so the doors are creaking open. But what does that really mean for the crypto space? Let's break down the three biggest impacts, the three powerful tailwinds that this is creating for absolutely everyone in crypto. So here's the breakdown. First off, these new channels mean a potential flood of new money, new liquidity coming in through safe, regulated pathways. Second, this is long-term capital. We're talking about retirement investors who think in decades, not days. They bring a ton of stability. And third, this is the ultimate stamp of approval. It reduces fear and it signals to the entire world that crypto is a serious, valid asset class. So that's the big picture, right? The massive wave. But how does a wave like that actually impact the individual projects and tokens on the ground? To really see this in action, the source we're looking at today zooms in on a specific case study, a token called PZEN. The argument is that this token is in a really unique position to catch these new tailwinds. And here's the core connection the source makes. It's all about the investor's mindset. This new wave of pension savers, they're all about long-term growth and compounding returns. And that, the source argues, lines up perfectly with the design of a token like PZEN, which is literally built to reward the people who stick around for the long haul. So how does it do that? Well, it uses something the source calls the pay-it-forward system. The easiest way to think about it is like a built-in reward program. A tiny piece of every single transaction on the network gets automatically shared with everyone holding the token. So, as the network gets bigger and more people use it, the rewards for those long-term holders just keep growing. So, with all this change in the air, the source has some key advice for anyone already in crypto on how to play this new game. And the big takeaway is that it's becoming less about chasing short-term hype and way more about understanding the deep fundamentals. And the source really boils this all down to one powerful phrase: distribution is destiny. In other words, the long-term success of any asset comes down to how many people can get their hands on it easily and safely. And right now, those access points are being built at an incredible speed. So let's recap the key takeaways here. First, understand that these new regulated gates are making the potential market absolutely massive. Second, remember that these big macro trends, more users, more volume, can directly feed into the reward systems of specific projects. And finally, the winning strategy for the next decade isn't going to be chasing hype. It's going to be discipline and conviction. Okay, let's zoom back out for the big finish here. What we're watching unfold is so much more than just a new place to invest your money. We are watching a new technology get woven into the very fabric of the global financial system. Now, I know some people might look at this and think crypto is selling out or becoming too centralized, but our source has a really powerful way of looking at it. This isn't the end of decentralization, it's its validation.
It's proof that the ideas born in this space are so powerful that the old guard of finance has no choice but to open their doors and let them in. So, as we wrap this up, here is the bottom line. The train tracks are being laid. The pathways for trillions of dollars in retirement funds to potentially flow into this ecosystem are being built right now, as we speak. The only real question left is what and who is going to be running on those new rails into the future?